Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. At present, the Australian dollar has upheld relatively well, mainly due to the US dollar weakness. Overnight, the dollar index attempted to recover but failed and temporarily has stumbled back towards the recent lows of the last couple of days of 89 figure 20. Yesterday, the RBA led more to a hawkish beginning after the minutes revealed that the RBA viewed the next move in interest cash rates will be up rather than down. The RBA is expected only a gradual increase in wages and inflation, which means in the short term we could see rates on hold, but I do question whether the market will start to look for a rate hike towards May. In the last few days, the market has attempted to stage further upside tests, and you can see here from the shooting star, which is bearish at this stage, needs further confirmation. Now, with rejection from the 78 level on Friday, and also the 60-day moving average, which comes in at 78.18, should add further weakness to the Aussie, and I still like to be short. And if we get a break under 77.45, this would give further scope to the downside and look towards 76.95 to 76.30.35. On the top side, as I mentioned, still resistance around 77.95 to 05 on the day. With little direction in the euro and also with the dollar index still slightly questionable whether it can recover, may still see a slight test to the upside but not to sustain. The market hasn't really showed any direction in the last 6 days. It's unlikely to so at present. Also overnight, the US President Trump's decision to scrap plans to impose fresh sanctions on Russia, which could ease short-term whipsawedness that we've been seeing over the last few days. It was mentioned that the US Ambassador to the United Nations, Nikki Haley, said earlier in the week that the US planned sanctions against Moscow, which would be coming down on Monday. But this, however, was cut by the White House officials, saying that Trump, however, deemed a fresh round of sanctions against Russia unnecessary because Russia did not follow through on its pledge to intercept US missiles in Syria. So there's still a bit of a question what's happening there with the markets in terms of what's coming out of the White House. But for the euro, at present, the range looks at 123.90 to 123.20 to 123.90. Since the knee-jerk reaction towards a 107.70, the market is breaking down and does look like it could challenge that level of 106.55.60, but overall, the market's still locked within this short-term range. I expect to see dips as a buy and a recovery to eventually take on the challenge of 107.70. A break above there leads to 108 to 109. Now, the break above 142.90 for the last 7 days of bullishness in the pound is actually starting to foul. We are overbought, and from the points of this RSI, it does suggest that we've seen a slight sharp turnaround. If we see further weakness, then the challenge towards the downside would now have to take place upon the level of 142.75, and beneath there would give further scope to 142.40 to 20. Resistance on the day, 143.65. Overall, I do feel the market is due for a downside correction. Little direction in gold overnight, even though it did stage a slight pullback, but failed to sustain. And as you can see, currently giving a little direction on the day. But technically, I do believe the market can break down further and back away from this resistance at present that's seen around 48 to 52 and look towards 39 down to 32, which was near the lows of last night. Interesting to see, though, gold is a little bit weaker, but silver is still maintaining its gains and looking towards this $16.85. And as you know, I am bullish and I do expect to see further tests towards the upside. A break above 85 would see further stops of this 4-month range and look towards the $17 region. I still like silver very much as a commodity, and I still expect to see further gains with dips to be shallow. And rounded off with oil, well, the market's questionable now whether we've seen this 3-year high to cap for now. It's around 67.5, and look back to the downside. A close under $66 a barrel would give further indication that we are breaking down and could see a further weakness towards $63 a barrel. Resistance on the day comes in around 67.40.60. So that rounds up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day that's ahead.